we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So here we have the 2-hour price chart. I wanted to start off with the daily price chart, but it's a bit easier to see things, to see these current formations on the 2-hour price chart. So what we're going to be looking at here is a bit of a week ahead strategy to identify some specific support and resistance levels, some specific trading levels that can be used to develop some profitable trading strategies for this stock in the week ahead. So as we can see here, share prices have obviously fallen since the company reported its earnings, second quarter earnings report. Overall, my view of this is that this reaction has largely been irrational. I don't think it really matches, the realities of the report itself. I don't think that there was much to be found in the report that was negative. I think it was a very high bar that the market was setting for this company, and I think that for all intents and purposes, NVIDIA did manage to clear that bar. I don't think there were any significant weaknesses that anybody has really managed to point to. I'm not hearing any convincing arguments which suggest that there should be selling pressure at the moment. So as things currently stand, I do view this stock as being a buy on dips. The question here is how much further will prices extend to the downside? In order to arrive at some conclusions here for the extent to which share prices will continue to move lower, we first need to do a bit of Fibonacci analysis here. And in this situation, I've really got two sort of opposing Fibonacci studies here. One is focused in the downward direction and one is focused in the upward direction. And the reason that I have two on this chart, that's not normal to see that. But the reason that I have two plotted on this chart is because I feel that these different trend waves here are working in conjunction with one another. So specifically what we're looking at here first is the prior decline from 140.76 to these near-term lows coming in at 90.69. As prices continued to progress through that trend movement, we did see share prices start to fail right at the 78.6% fib retracement of this prior trending move. Of course, this is not the current trending move, but as you'll see here, these lines match up extremely closely. So here we can see the 786 retracement from the prior trending move working as resistance for this range top here that started to develop right around 131.76. So we're talking about $1 difference here in overall share prices. Share prices did manage to break above this 786 slightly by about $1. But as we can see here, share prices did ultimately find resistance in this area. You can really call this a triple top here in terms of resistance formations. 1, 2, 3, and then possibly even a weak fourth test where share prices did ultimately start to move lower. So, this is clearly the resistance zone that needs to be watched here. And in my view, this is being formed by the prior trend movement in the downward direction. So in order to find a potential bottom here and a potential reversal point for the positive direction, we will conversely need to start to look at this movement higher. So now we're looking at the price rally essentially from 90.69 to 131.26. So in doing this, we can see that share prices have already broken through the 23.6% fib level fairly significantly, fairly quickly. We even saw a bit of a gapping price movement below that price zone. So the 23.6 really didn't provide very much support at all. But a lot of that can be attributed to the fact that there was a price gap through there. There wouldn't have been as much opportunity for share prices to find support there. And currently what we're looking at is a share price movement that has created price lows coming in at 116.71 and relatively close to the 200 period exponential moving average on the 2-hour price chart. So essentially that would be this rising blue line here. So we're starting to find some support in this area. In addition to this, we also have some fairly significant support here coming in at the 38.2% Fibonacci retracement of this most recent trending move higher. So essentially, that's the move from 90.69 to 131.26. Here we can see that the 38.2% fib retracement comes in right around 115.70. So again, we're talking about roughly a difference in prices of about $1. So it is quite possible here that we do start to find some support near term. I do actually expect share prices to start to bounce here, given the fact that we are already starting to find some support at this 200 period EMA, and then in addition to that, $1 lower, you've got this 38.2% fib retracement. So essentially, you've got two different signals here working in combination with one another that should be likely to, create some support for this stock going forward. So if you combine this with the fact that, quite possibly this reaction to the Q2 earnings report was irrational, was a bit unfair. The market starts to just expect, it's like a kind of a petulant child sort of a thing, like you give the child what it wants and it's still not happy. I do think that this is what is going on with the market at the moment. The market was expecting to be surprised, and then when that didn't exactly happen, share prices start to move lower. But maybe there was no surprise here because the expectation was so high. Maybe if the expectation was a bit more reasonable, a bit more in line with what's traditionally seen with multi-trillion-dollar companies, maybe the market would have been a bit more surprised. The results were surprising; they were incredible. It's an incredible company at an incredible phase in its growth process. So, as things currently stand, I do view this recent move lower to be irrational, and I am seeing a few different signals here coming in right around 115.70 to 116.70, which do suggest that share prices are unlikely to fall much lower. Now, could that outlook be incorrect? Of course, it could be incorrect. Anything could be incorrect. And then, in addition to that, we're also seeing, we're also still caught in this summer trading condition, which is typically characterized by lower liquidity levels, lower liquidity levels. So what that means is that it's much easier to push around share prices. It's much easier to have outsized price moves, even with smaller trading volumes, smaller order flow, and things like that. Can have the tendency to push around prices to a larger extent. So could we see share prices continue to move lower? I suppose, but I find it very hard to believe at the moment that we're going to see share prices drop significantly below 115.70. There's a confluence of technical signals here, and then we have, in addition to that, we have the fact that the earnings report was actually pretty good. So I think the market needs to sort of wake up and realize that. Here's the current market update, strategy update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.